I thought it would be funny to take some of your legendary quotes and witticisms. They've all been attributed to you. You'll tell me if they're not actually you. But these have been taken from interviews you've given over the years, from the books that you've written, from the things that you've written and published. I thought it'd be fun to share some of these with the audience, and the audience probably can quote some of these by heart, and just have you react to them and tell us where it came from or what the lesson is behind the thing that you were trying to get across. I've got a couple of categories for these quotes. I did a little taxonomy. So the first category involves the risk of investing in stocks. And you said, the real key to making money in stocks is not to get scared out of them. Why is that the key to making money in stocks?
Well, more important to that is I have this expression, know what you own.
I was going to do that one later. I'll cross it off.
But that's it. That's the most important lesson.
Okay.
Because you'll get shaken out if the stock goes from 10 to 8. You don't know what they're doing. What are you going to do with it? And I was saying earlier, I got a call. I did an ad for Fidelity with Lily Tomlin. She's very close with Barbara Streisand. So I'm on vacation, my wife and 2 other couples, and my secretary, Paul Sull, says, Barbara Streisand's called 3 times. She'd really like to talk to you. And she's very nice, and I said, sure, I got some time this afternoon. So I called her, she says, I own all these stocks, and I'm getting up at 5 a.m. and looking at this stuff, and she said, I never did drugs, I never did marijuana, I just can't sleep. What do I do? I says, tell me 5 things you own. She named 5 companies. I say, okay, what did they do? She didn't have any idea. She's an incredibly talented person. She had no idea what those companies did.
Right.
So what are you going to do if they go down 50%?
Yeah.
If you don't understand what you own, you're toast.
It sounds so obvious to hear you say it, but it's amazing. You talk about people spend more time researching a refrigerator they're going to buy than they do a stock they're going to invest part of their life savings.
People are very careful. They spend hours, get $50 off on an airplane flight. They look at everything.
Right.
And they'll put $10,000 in some crazy stock they heard on the bus. And they have no idea what they're doing. And somebody invented this awful term before I got in the business called play the market.
Play the market. You don't like that term.
That is sometimes a noun, there it's a verb. It's a very dangerous verb. Play the market is not what you do.
Okay.
You buy good companies, and some work, and you have to know what they do. There was this farm in Western Massachusetts. There are 2 companies, Tampax out there, Friendly Ice Cream. You put $1,000 in a month for 10 years. Brilliant idea. Says, if they stop hiring, I'm going to leave.
Okay.
He made $1 million. Huh. I mean, people have all these edges. There's people in the steel industry know it's getting better before I do. There's people have an edge, and they might as well go to a casino and bet on red,
So by knowing the companies that you're invested in, there's a higher likelihood that you'll be able to stick with them when other people are scared.
Yeah. The average range for a stock on the New York Stock Exchange, the average high, average low, every year is 100%. So the stock might start at 20, sell at 28, finish at 14, finish at 20. It's a 100% move every year.
So it's 50% up, 50% down-ish, and that's how it's a 100% swing in the price.
That's the average stock.
Wow.
And most stocks you're going to buy, they're probably going to go down. The odds, sometimes they go up. If the story's powerful, like Watsco or Chrysler, you might buy it up. But if you don't know what they do and it goes down, and I've had people say, this stock's gone from 50 to 1. How much can I lose? And I say, well, wait a second. If somebody put $10,000 in at 50, and you put $50,000 at 1, if it goes to 0, who loses the most? I mean, stocks go to 0. I've had them. I wasn't buying them on the way to 0. But stocks go down. If you don't understand what they do, if you can't explain to an 11-year-old in a minute or less why you own it, not this sucker's going up. I've heard that one before. What's the story of this company? They have good business, good balance sheet, they're fine. That's why I own it.
Yeah.
If you can't do that, You should buy a fund.
You've instructed investors to write a script for the stock they're going to buy.
Yeah.
Write the story down. Why is this stock going to work? Or why is it undervalued?
Because I've told this to people in high school and college saying, make a paper portfolio,
Yeah.
pick 10 stocks, and watch them over a year or two and say why you bought them. List the reasons and see what happens.
Right.
That's what we're about. We do this. We have those, our fund managers, they don't wait for the analysts to come in. They're out researching companies. They're on the phone talking to companies. Every fund manager is the highest role of Fidelity is an analyst, a fund manager analyst. We have analysts under that. We have all this information coming in. It's staggering now, the information. I could go back in time. We own a lot of Nike. The story's amazing. Own a lot of Nike, and their inventories were out of whack. Not a good sign. It's before the internet. We had to go to a library and get their quarterly report. Our library, Fidelity. Came in, we opened up, inventories went down, we backed up the truck. I mean, the concept of, they used to mail it out by mail to the shareholders. Now they have a website, everybody on the planet knows what they do.
Yeah.
Information today is unbelievable. If you can't understand, they have company presentations. It's a lot easier to understand what you own today.
So I think you're saying in today's day and age, you have no excuse not to know the companies you own. It's
Absolutely.
too easy. It's too easy.
You don't need a Bloomberg. They have websites.
Here's another one on risk. You said far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in corrections themselves. Talk about that.
Well, I think people, they're always worried the market's going down, and it does, as I mentioned. And 2 years ago, they were saying 2024 was going to be a down year for the economy, and 25 is going to be a down year. I mean,
every year.
I think economists have predicted 33 of the last 11 recessions.
Yes.
And
with great certainty.
Yeah. And I think people they're basically. You look dumb in this business. You're terrific in this business. You write 6.5 times out of 10.
Yeah.
That's a great score.
Yeah.
Even if you write 5 times out of 10, if you own Costco or Walmart or I can't even pronounce NVIDIA. I'm getting close to being able to pronounce it.
I think you nailed it just there.
That offsets your mistakes.
Yeah.
You have to have these winners offset mistakes, and that's what we've done for 70 years at Fidelity.